Given the extremely unique variables entering this year and the challenges that presents in making my normal observations, I decided that possibly the questions could be more intriguing than the answers. For instance, what will be the lasting impact on our employment numbers of COVID, both at a local level, a state level, and most importantly at the national level? Will GDP rebound to its pre-pandemic years? How about the stimulus that we're debating right now at Congress? Will that be a positive or a negative impact in the long run on our economy? These questions and many more answers are to be decided on by our elected officials. Don't get me wrong here. This year's market outlook is chock full of analysis and predictions. But at the national level, I decided it was time to hit a pause button. So with that in mind, we decided to go back and take a look at some of my past observations in previous market outlooks. Take a look.
Now, I left the last thing I introduced to you is the Black Swan theory. I'm not sure if you're familiar with that phrase. It was a popular book written not too long ago by a Wall Street trader. And a lot of times it's referred to in the economic sense. It certainly is a broader reach than that. And it's basically a series of unforeseen and hard to predict events that coalesce at the same time, at the same moment on the world stage and have a far-reaching impact to the world stage. I'm using it in phrases or in terms of the economic black swan. You certainly can use it for other things, but my point is could one of these countries be part of that next black swan event? Could it be a combination of some other things? So from a global perspective, it looks really scary out there.
But there's a silver lining in these numbers. We are adding jobs, but what kind of jobs are they? Well, not all these new jobs are part-time. A good number of them are part-time and further exacerbate a growing problem of income equality or wage stagnation. I like this chart because it shows the relationship between the productivity of workers over a long period of time and the compensation. At the risk of sounding too dramatic or overstating this issue, I believe wage stagnation will, if not successfully addressed at the national level, become one of the defining issues over the next 25 to 30 years that could lead to a direct threat to our republic.
Another trend is the retail model. And while I would say it's not broke, it's certainly in transition. Reggie's going to talk later on about retail, and you're going to hear a lot more detail about it, but it's one of those major trends from a real estate perspective that I think it's important to note. Last year, about $1.7 trillion was spent online. It's projected to be $3.5 trillion within 4 short years, double the online sales. That is rapidly changing the way we all buy things. And what that's doing is putting enormous pressure on certain retailers. So don't be surprised to see the middle market of the retail just get eroded, like the Macy's, JCPenney's, Sears. You're going to hear, like I said, more about that from Reggie here in a few minutes. In fact, I believe the most important indicator of the health, both short-term and long-term, of our economy is that of productivity. Productivity, as you know, is the output of our economy, which is the GDP, measured by the number of hours required to put that output out. And let's look at how productivity is done the last few years. You can see after 2009, we had a nice run-up of productivity in 2010, and then we immediately settled right back down into the sub 1% in productivity gains in our economy. In fact, last year in 2015, we were about 0.6%. Let's look a little bit longer term now at some historical trends on productivity. Last 5 years hasn't been that good. Last 10 years really hasn't been that good in productivity gains for that matter. You know, there have been decades past where our productivity gains in our economy have been 4, 5, and 6% gains for the whole decade. In fact, there's been years past where the productivity gains were 12%. So you can see if we've only done about 1.5% productivity, we are falling behind the economies around the world, and so that's concerning.
The next one I want to focus on is what I've called hipsterbia, if you will, or urban burb. I don't know if you realize this, but in 2 short years, we've seen 2.6 million millennials move from the urban core back to the suburban core. They're bringing with them experiences that they've had in the urban core. They're demanding that in the suburban core. You're seeing pockets emerge in our major cities of urban, suburban core that are geared towards that millennial group. We in Sioux Falls are doing just the opposite. We're still focused on moving people to the urban core. So we're probably 5 to 7 years behind the coast in that regard. But watch for that trend. Watch for it in our community. You're going to see more and more of that experiential part of the real estate. Reggie's going to talk about it in the retail sector quite a bit. So watch for that. The last 2 trends that I want to talk about really are probably threats more than opportunities. They could become opportunities if we handle them properly. And that is, the first one is really workforce housing. Every community across our country is struggling with workforce housing. We're no different here. The cost of permits, the cost of development, the cost of construction, everything is working against communities to deliver affordable workforce housing. In fact, South Dakota's real estate taxes are almost double on a multifamily property than they are in Iowa and Nebraska. We tax at a commercial level, not at a residential level. That's something that we could handle right at the state level, and I would challenge, I know there's people in the audience who are well aware of that, and I would challenge a community like ours to, if we want to tackle that workforce housing, that's something we could talk about at a state level. I mean, we're going to see, in my opinion, we're going to see more and more liberalization of laws. Marijuana is an example. Sports betting is another example. We're going to see it under, in the case of marijuana, probably under social justice reform, under prison reform. The cynic in me says we're going to see it under economics, both from the incarceration side, but also from the tax side. There's going to be a push to get taxes off of everything we can going forward. And that's why you're going to see more and more liberalization of what we consider laws that have been standard. So there's disruption there from a social standpoint. Well, certainly based on some of my past observations, we have a lot of work to do at the national level. But at the local level, we've addressed some of these tough issues already. And there's many more that we need to address as a united community. I'm convinced that we can do that and rise to the challenge. In fact, we've already seen the results of some of those decisions economically, so let's take a look at some of that. Unfortunately, our employment growth this year was not good. No surprise there with the pandemic. You can see that Sioux Falls finished with a negative 3.2% employment growth. However, look at the national, 6.1 negative employment growth. I should point out that we added about 10,000 new jobs that we lost in the pandemic. We're still short about 5,000 of those jobs, however. Let's look at it a different way now. In unemployment, you can see in January we're at about 3.4%, and we finished the year at 2.9%, lower than our pre-pandemic level. Now that's an anomaly if we had a negative job growth. The reason being is we had fewer people looking for jobs at the end of the year. That's not a surprise, however, but it shows the resiliency of the Sioux Falls economy. Well, often we transition into construction, and you would have thought with these negative job growth numbers that we would have seen a drop in our construction. Well, surprise, surprise, we had a record year last year despite those employment numbers, $919 million in total construction value for the year. Blew the record away big time. You can see historically commercial leads that way, usually about 2/3 to 1/3 to residential, same as this year. Every year we point out an anomaly, if you will. Usually it's one major project, and I'd like to show you what it was the last several years. In 2019, it was 2 schools that equaled about $100 million in total construction. 2020, you've heard the announcement already. Amazon announced and pulled a permit for $200 million in construction value. So you can see that helped boost our record year. But even without that, it was a strong year nonetheless. Now let's break it down even further just to commercial construction. And you can see that the City of Sioux Falls provides this information to us, and they do a great job of analyzing it for us. But what I want to point out is you can see that gold bar, and that is the new Amazon facility in the warehouse division, the construction for industrial product. And you can see a record year. I also should point out that the apartment sector, after 2 years of falling almost 60%, has now rebounded and is up around $160 million last year. I expect that to remain strong in 2021 and 2022. Notably absent from those big numbers again is retail, which leveled out at about $40 million, and I don't expect that to be very strong next year either. Let's transition now into what's addition, remodel, and new construction, because this slide really gives us an indicator of where we're heading, not where we've been. So if we are in an expanding economy, new construction outpaces addition, remodel. You can see where it crossed in prior years, and that was coming out of the last recession. So you can see this gap continues to widen even greater. All that tells me is 2021 and 2022 are going to be really strong years for construction going forward. Now, we always want to compare ourselves, so let's do it again and pat ourselves on the back one more time. You can see we like to look at these other economies, see where they've been, and see how we compare with that, and look at what we did with fewer population base than some of those communities, and yet we have a greater number of value of construction than they have. So I look for 2021 and beyond to continue to remain very strong economically in our construction and real estate markets.